Well, good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening, as we're here now on the 27th of November, 2023, and the time 5:50 p.m. Central Time. Well, the gold market, 2015. So the market is just saying, you know something? Dollar's not acting that good. Inflation hasn't gone away. The market's getting more and more convinced that on the bonds and the notes that no one's raising interest rates. When I say no one, it could be the ECB, the Bank of England, the United States. Everybody in the G7 seems to be very comfortable. Don't know what Japan's going to do, but everybody else is pretty comfortable just sitting here with a pause. And because inflation numbers are still there, they're not collapsing. They're not running, but they're not collapsing. It's giving gold something of a bid, especially as foreign currencies are moving against the dollar to a certain degree. Not quite certain what to tell anybody on the energies. OPEC will meet on the 27th. Well, today's 27th, the 30th of November. My mind's screwed up. I've got something else on it. On the 30th, which is this Thursday, so far, nobody's saying how this is going to play out. If they don't do another cut, I read that the market will say, okay, if they just hold it as it is, they're hoping and praying that demand will pick up. Whereas if they get another round of cuts in some manner out of the African countries to join in, or Saudi just goes it on its own, I don't know how they would do it, that could be a little supportive. But without that support, and if Saudi Arabia got angry and can't get anybody to join in and said, you know something, we're going to remove our price cut, you could be looking at this market tanking a big amount right away. So you got to be looking at that carefully, but that's the features we have going on. There's one other thing as we're in the metal section. Are you looking at food prices? The grain prices have been in a state of collapse along with the meats who have joined in. You're going to see very soon that your pork and your beef prices are going down hard. Now, if you could get more things to go down, such as rent, the government would say that it's done a pretty good job of getting inflation going in the right direction. It's starting to point that way. We'll see what happens. As you and I look at gold and we just look at a weekly chart of closes, the market is over the 18, I said day, this should be the 18-week moving average of closes. They have a new version of the charting software and all my labels aren't taking. If I shut this off, they'll be gone. So they're tonight going to fix everything. But as you can see, you're over that, so the bias is up. You can see how the market's been moving on the daily chart to the upside. And on the swing lines, you do have higher lows and higher highs, which is bullish in the market. Now, another thing that's starting to take place, you're getting very close to the point where the red, which is the 18-day average of closes, is getting ready to go over the 200-day in gray. This is the 200-day. This is the 100. So that could be another mini crossover. I like in a bull market when the 18 is over the 100 and the 100 is over the 200, lined up in that sequence. But this isn't bad. So where's the resistance going to be? You go to your Bollinger Band top and it's right here. So as the market got up today and it was in that general zone, what I was telling traders is I think the pros were taking money off the table against that 2023 level. And I still think that's what they did. And the market did back off. While you're up 260, you closed really at the 2012.40. And that was $10 nearly off the highs of the day. Momentum-wise, you're overbought. So overbought into the Bollinger Band, pretty much sideways action. Doesn't mean the bull case isn't there because the swing line's up, but I do have the power to break out to the upside and make this a bottom. I don't know that you do at this point. When I look at the gold-silver ratio, it continues to fall, which means silver's stronger than the gold on a relative chart basis and on a real basis. Let me come back to that 1 second. The lower the number goes, the fewer ounces of silver you need to get 1 ounce of gold. In a perfect world with no commission, nobody's jacking up and saying, oh, I'll take your silver, but I want this for it, playing the spot market, simple and pure. When you look at the silver chart, you can see how it's grabbed onto the upper Bollinger Band, and it's getting very close to embedding, which occurs when two numbers, the red line and the blue, go over 80 and go sideways, which brings me, before I finish this up, to the point that we're having our Cyber Week sale right here, right now. So if you want to take advantage, you can get either my full charting course. And by the way, I should have a new one out sometime late December. That's my goal. So if you choose that, I ask you to hold back. We'll give it to you, but it'll be the brand new one rather than one that's probably 7, 8 years old that I did. The others are new. The Bollinger Band course, I've done these in recent, and the Outside Day course. They're phenomenal. But in the Bollinger Band course, you learn just what I'm talking about here. How do you get these different parts? Well, let me tell you the deal. With a 1-year subscription to any of my research, you get it. A new subscription to any of them will do the job. Returning people, you too would qualify for that as long as you don't quit today and say, oh, I'll rebuy the day after. I won't honor that, you can imagine. So don't get cute. The other thing that I can't honor is if, let's assume you have a morning subscriber video, full year subscription, and you want to move to the futures. That's just going sideways. If you take and you have one of those and you go to a combo, I will honor it. If you want to go to full research, I will honor that. Okay, those are the things I'll do, but not lateral sideways movement. Not going to honor that to get a free course. And these courses, give you an idea. My charting course costs $600. My enhanced Bollinger Band, $120 for these two courses. So they're not cheap. They're not expensive either. And in most of the cases, my subscriptions for a year run in that ballpark. And certainly, the charting course pays for the full research subscription that I do. So if you buy that one, it is the same value as that, and you get it for free. You can give these away as gifts. You can work with any way you want with it. We'll work with you. Is that pretty fair? But you got to take advantage. You can go to either our website by clicking on a link up here. You can go, if you're watching me on YouTube, you will see a link. Give that a click. And if you have any questions, call my staff. They'll work with you from the hours of 7:30 in the morning till about 5. Don't call in the evening unless you leave a voicemail, and we'll call you back first thing in the morning. Okay? So where we were was over in the silver. Now in the copper market, the problem here remains China. And the property market isn't buying into President Xi's, well, what we'll do is we're going to tell the banks to lend more money to 50 different property managers, and we'll make some things better. The market's not buying into all that. And that's a problem. And with it, the copper market isn't responding on a positive note. So the real thing that has to be done is I think the government has to just come out and say, we will guarantee to the banks that make loans at X and X rate that they are protected. It'll be the state money. That might do the job because the public's not going to be fooled again. And they have to make other rules. Maybe a little speculation takes place in it. They haven't gone far enough, and the market is telling them that. When you look at the platinum, we're in a battleground. We're caught between the 18-day average for support, and right here, the green is the 100-day average. Now, if you pop through that, you have a new battleground, but it would be still a friendly picture of the 200-day average right through here in the upper band. How often do you go through Bollinger Bands? Take a look at this chart. Look at the black dashed line. 5% of the time you settle outside of them. So you use that as a resistance point and a support point. That doesn't mean that there won't be times when the market can't run the bands the way they do here. But if they embed, there's a way to catch it, and that's what the courses are that I have for you. So they show you how to work with that. When we take a look at the dollar index, I'm in the bear camp. I've said that to you before. You can see the lower highs, lower lows. You're embedded. The market's at the next support level. Haven't seen this level, the 200-day average, in a very long period. And if it cracks, the 102.60 area is probably the next zone. Resistance probably back at what was support now, the 100-day average. And that's how I'd be viewing the market. Get up and over 104.11.5, and you negate this downtrend. You don't start an uptrend, but this wave would be over. So far, I don't see it as being over one way or the other. So again, to take advantage of the sale that we have going on with our courses, simply move your cursor up to the top here on your computer. It'll take you right to the area that you need. It's not on our website. It's a special page we've created outside of it. That's why you need these specific links. You can also take a look, if you will, on our YouTube. You'll see that there's a link there. And I have been sending emails out each day to those of you that we have working emails for, and you're getting from us the advantage. This all ends in 4 more days, and that's it. So if I were you, it's a great gift to give somebody, and it's a wonderful gift for yourself to learn with if you do that, and or the daily action that we put on all the charts. I'm Ira. You have yourself a great day. I'll speak with you all tomorrow. Take care now.